Taxes and escrow. What is it? So if you got rental properties, you want to make sure your taxes and escrow go onto your balance sheet. And basically what it is when you buy a property, you're paying for the taxes and the insurance in advance. And then whoever your loan company is, they pay on your behalf. So to set it up, you'll go into your chart of accounts and you'll create a tax and insurance escrow, which is another current asset. So it'll be set up like this, and whatever prepaid expenses can be the detail type. And to get it in the books is when you create the journal entry to put your asset onto your books. So I just created like a quick one here for you. So I just made a lot of this up, but the tax and insurance will be on the HUD statement. So this is what you're copying when you get it from the title company. And what I've learned from my last refinance, this is in the settlement charges, you'll see something similar to this. It'll have like the insurance and property taxes. So you could see that I prepaid this amount when I refinanced the property. So this is what this number is here. And then the rest I just kind of made these numbers up. But just for your reference, I know every HUD statement looks different, but this is what mine looked like, and this is how I found it. So that's basically the starting balance of your escrow account. And then when you go to the reports, you'll see it on your balance sheet. So you'll have your asset, your loan, and then a tax and escrow account in the current asset. So here's that, and there's the balance. So this should match. And then of course your loan should match as well. And then when you're making payments, what I typically do for my books is I just create a rule. So you'll see that I paid for the mortgage here, and then I'll come down here and I'll create a rule. And you could just say mortgage payment or something. And whatever the description is. And then we'll split this up by the amount. So let's just take what I have for an example. Hopefully you guys can see this all right. I know it's probably pretty small on the screen, but this would be the loan amount. So this is the balance of the remaining of your loan. So my numbers aren't going to match up. I just made them up in the books. But basically what you would do on your first payment, you would see the principal. So we're just going to put the 190.82, and this will go towards the loan. So I just have it as a conventional loan, and then we'll just say the class for rental 1. Then the second category will be the interest. And we're going to add a line here. So we want conventional loan, the interest. So we'll put this interest amount in here at $94.35. And then the remainder is going to be the tax and escrow account. All right, and then you'll just put, whoever gave you the loan, and then you'll save this. And I usually like to do all bank accounts, but you'll save that as a rule. And then anytime you come in here, these numbers are going to be different, but you would just come back in each month and you'll hit that split, and then you can change these amounts. So that's how you would do that, and then you would just post it. Okay, so I'll just show you what this looks like real quick for that tax and escrow balance. So if we go in the balance sheet again, so there's our balance as of now, because we're adding to that escrow account, so this will just start building up. And then typically on your next statement, it's going to show this escrow balance. So this is one thing I never really noticed before. I didn't even know how to check that balance, but it just shows you right in here. So this is what the escrow balance is showing. And I believe that because I paid a tax the month before, so if we come at the bottom here, you can see that there was a payment for the county tax for $1128.02. So this is what's showing what they're paying on behalf for you. So if I go back to my transactions, and I just undo this payment here. So we have our rule set up. We'll go into split. So we put in the correct numbers, and then what you would do for when you make a payment is you'll have a property tax and a property insurance expense category. So in this case, we're paying for a tax, so we're going to put in the property taxes. And this amount will be for $1128.02. And then we're going to do the tax and insurance, and we're going to put a negative $1128.02. So I'll give you the correct balance again. You have this positive and negative. And then of course put your classes for the property. So let's just see what this does. Let's go back into the reports. And now you'll see that the escrow account has gone down. So we're at $1157.91. So basically, when you come in here, that number should match your escrow balance. So you just want to double check that to make sure that it's correct. But that's really all you have to do. So once you set up that rule, just keep a lookout for in these statements to see if they're making payments on any kind of tax or insurance, and then that will determine your balance. And then each month you want to go into your tax and escrow in the bank register. So I'll just show you real fast. It's the same thing if you're reconciling bank accounts. So you want to reconcile your loan, and you want to reconcile the escrow account so you can make sure that they match. So you could just come right back in here. You have the tax and insurance escrow, and then just reconcile it. So anyways, I wanted to show you guys that just so you were aware that this is part of, if you have rental properties, then you want to get that escrow on there and make sure you're reconciling every month. So if you guys have questions, just leave a comment below, but otherwise I'll see you in the next video.